It's the final day of the trading week, and joining me down the line to share his insights on what's been moving and shaking the markets is Schulz. Christian, so it looks as though this week will end on a bit of a soft note in terms of equities. Data-wise, there hasn't been a huge amount for investors to mull over either. But how would you describe sentiment at present? Is the market still in wait-and-see mode?
Well, overall, it's been a pretty good start into 2014 for the markets, and this week, despite a few wobbles, wasn't really much of a change. We have, in particular, very good sentiment towards the Eurozone periphery. The markets, both bond markets and equity markets in Spain, Italy, and so on, are doing very well. More core European and international markets, safe haven markets, are maybe slightly weaker. We've had relatively little data indeed to mull over this week. We've had some decent U.S. retail figures, which gave a bit of reassurance after the non-farm payrolls, which indeed were weak. We had relatively inline U.S. housing data as well. So in terms of the discussion about the Fed tapering, not that much new to mull over. We had German GDP, which was a bit of a disappointment, in particular with regards to Q4 for the Eurozone, but that seems to instill some discussion in the markets whether there may be more stimulus from the ECB coming forward after that big announcement last week that they are ready to do everything possible if inflation falls further. So we are maybe lacking a bit of direction sort of in broad terms, but some of the most interesting markets in the Eurozone, in the periphery, are doing quite well this week.
Next week, we'll see the meeting minutes from Canada, the Bank of Japan and the Bank of England. Each of these economies appear to be coming within touching distance to their respective targets more quickly than expected, raising questions over their sustainability. With that in mind, exactly what further guidance will the market participants be hoping for from the people in charge?
Well, these three central banks are very interesting. All three of them are, in particular, the Bank of Japan and the Bank of England, are sitting on quite strong recoveries at the moment here in the UK in particular. The economy is showing strong signs. We've had retail sales in the UK out this morning. They were very strong. And in particular, the housing market, and that's true for Canada and for the UK, is showing some signs that there may be a boom building, which at some point will need a closer eye from the central bank in the case of the Bank of England, maybe even now already. And this is very likely to be reflected in the central bank minutes as well from the last meetings, that they do need to have an eye on this. And from the minutes, and therefore they can also have an impact on markets, we'll see how close they are to changing their outlook. In the case of the Bank of England, it becomes extremely interesting because they've tied their forward guidance to a specific target for the unemployment rate, 7%. And that unemployment target might be getting even closer into sight with next week's unemployment data, where we expect a decline in the unemployment rate to 7.3%. And that raises the question, what to do once the threshold is hit. Of course, the Bank of England has said that this is just a threshold, not a trigger for an interest rate hike, but it needs to be reflected in the forward guidance, or indeed the forward guidance needs to be dropped, so to reassure markets that we're not facing an imminent rate hike. So it is a bit of a conundrum for the central bank, and therefore these discussions, as reflected in the minutes, will be watched very closely by markets, and if there is any sign that policy tightening might be closer, then markets will react.
Europe was in the spotlight this week as François Hollande struggled to keep his private life from marring his bid to revitalise Europe's second largest economy by promising a landmark €30 billion payroll tax cut for French companies. The euro-dollar is battling with the 1.36 handle, but how do you see it performing in the coming weeks with next week's block data feed in mind, as well as the US NFP's hangover beginning to lift?
Well, despite the latest weakness in non-farm payrolls, the monetary policy outlook for the US compared to the Eurozone is one of rather tighter monetary policy. So that should be supportive for the dollar against the euro over the course of this year. At the same time, there are some factors which support the euro as well. One is strictly fundamental. Europe is, or the eurozone is running a big current account surplus at the moment. That should increase demand for euros. And the other is that we're still having a bit of a confidence recovery in the common currency. The euro is still benefiting from the return of many investors who had shunned the eurozone for a long time due to fears over a breakup of the eurozone. That supports the euro as well. So while I do think that the euro is likely to continue to decline as the European recovery will be weaker across 2014 than the American recovery, and therefore the monetary policy outlook for the US will be tighter than for the eurozone. While I do think that the dollar will strengthen further, there is some support for the euro as well, so I don't expect that move to be very large. We expect the dollar to the euro at 130 by the end of the year.
Christian, thank you so much for your time and perspectives today. Lovely speaking to you. Well, that's all from me for now, but tune back in on Monday when I'll be bringing you a closer look at what could be affecting your trades. Have a great weekend.